here. I'm impressed we've coaxed some of you away from the free drinks outside. That's good. So I'm Brian Hanrahan. I'm the CEO of Nuapay, which is now part of EML Payments.
And Ruwani Hewa, Product and Propositions Director at Nuapay.
So about a year and a half ago, Nuapay was acquired by EML. And we were very much an open banking company in the account-to-account space for the last kind of 20 years or so. We, have now become part of a global business. We're, I think, one of probably the first open banking players to have been acquired by a listed company, and now we're operating across the globe, effectively 32 countries, just a little under 700 people, and we're very proud to have an open banking network in Europe, which covers about 2,300 banks. Look, I think this is a really interesting part of the market, in my opinion. Embedded payments, open banking, how those two things come together, I think is one of the things that's going to define the next few years, right? Now, predicting the size of a market is a job for people who are far more intelligent than me. But these guys have a number of really interesting data points, and they've come from lots of different sources now at this stage. It's a huge market, about $32 billion in the current year or the previous year, and doubling over the next few years to 2027. I think also the open banking payment subsegment of that, in terms of flows, is expected to get to $330 billion globally in the year 2027. So we're seeing kind of massive growth here. The pattern's pretty obvious at this stage. And then I'll just take a quick spotlight onto the UK. Because I suppose in the PSD2 sense of open banking, the statistics are now getting quite interesting, right? So we're up to about 7 million active users in the UK over the last few years. That's ramped up massively, and it's continuing to grow at about 10% month on month. If you look at the UK, what's now happening day to day is that you can barely borrow money in the UK unless you go through an open banking data journey to confirm the affordability check in real time. If you are paying your taxes, you will always be presented now with an open banking or pay by bank option, which is a great way to get the consumer population familiar with this, which is half the battle, I think, on open banking, and that's ramping up really nicely. So we're just going to go through a few use cases to bring it to life. So over to Ronnie.
Thanks, Brian. So embedded finance and embedded payments actually has been around for decades. One of the earliest forms of embedded payments is actually the Amazon one-click buy button. Amazon revolutionized e-commerce payments by convincing customers to save address and payment details to seamlessly smooth the checkout process, thus increasing sales and conversions, and also increasing customer adoption and loyalty. Another example where I think everyone is quite familiar with is Uber. And the background of a Uber app, there's an invisible payment that occurs when you book and complete your ride. And you can get this same seamless experience anywhere in the world where Uber is actually used. What's probably less known, though, is that Uber actually provides financial services to their drivers in the US. What Uber has realized is that a lot of their drivers are classified as underbanked in the US and therefore lacking access to traditional banking services. So as you can see on this slide, Uber actually embed a payment account within the driver's app for the driver's earnings to be paid and credited to, which can be accessed via a cashback debit card where a driver can use it at an ATM or at multiple different merchants.
Look, we think this is a really interesting case, right? If you think about why Uber is doing this, right? So why is a merchant getting involved in banking these drivers effectively? And the core of Uber's being is a marketplace between drivers and passengers. They're trying to attract as many drivers as possible, and they're trying to make those drivers as committed to the Uber brand as they possibly can. So when it shows, I think, when you think about payments holistically, moving into an embedded payment, embedded finance mindset, you can really kind of create competitive advantage for the merchant. I think, look, another example, around the kind of where this is going, is we do see that this quote about the future is here is just not evenly distributed. I think there's some really good predictions from PwC that by 2025 we'll see about $400 billion of these frictionless payment experiences. So frictionless payments, or just walk out, checkout experiences in the physical world, is probably best personified, or as an example, from Amazon Go. So these stores with Amazon Go are being used in the US and a number of other countries now, and people are simply gathering their products and walking out the door. And I think this is, again, a powerful use case. If you then inject open banking or instant payment account-to-account rails into the equation, you turbocharge the business case even further. So the savings that have become possible then for the merchant are phenomenal, and that adds to the pre-existing use case around the customer convenience and the loyalty benefits of these just walk out, checkout experiences.
In 2019, Angela Strange from Andreessen Horowitz, a VC company, famously stated that every company will become a fintech. And this essentially is because of the rise of embedded payments and embedded finance. McKinsey classified embedded payments as the placing of a financial product in a non-financial customer experience journey or platform. The growth of banking as a service, payments as a service, and open banking has allowed this and revolutionized the way regulated banks and fintechs work with brands to deliver and enable frictionless customer journeys via API-driven platforms. Banking as a service and open banking deconstructs and unbundles financial services that can be rebundled into multiple different propositions for the customer within the context of the customer's need.
So we wanted to take that down, a level to the street, I guess, So we at Nuapay, we're doing these kind of regular surveys of merchants and our partner PSPs throughout Europe. In this particular one, we surveyed 250 payment professionals at larger corporates, larger merchants. And look, I think it was really interesting and bodes very well for the people in the room here. We asked them the question, which payment methods or technologies are going to present them with the most opportunities over the next 3 years? And the level of awareness is really building. Now, yes, this is a kind of more of a payment specialist cohort, but we are still talking about people who are sitting in corporates. And they identified in 50% of cases open banking as one of the major opportunities. And I think, interestingly, 38% identified embedded finance as one of those as well. Like, one of the most enjoyable aspects of Nuapay being acquired by a kind of a more general business is the ability to kind of bring together a few different things for our clients and go that broader and deeper to these use cases with them. I think what we're seeing increasingly is a convergence between card rails and account-to-account rails, between open banking and more proprietary channels. And I think it's actually in the intersection of these things, that you're able to kind of create the most compelling use cases.
So I'm just going to walk through a couple of use cases with our current clients at Nuapay. One is the Perfect Gift. So the Perfect Gift issue an open loop gift card, spend anywhere on the MasterCard network. And they came to us to essentially solve a lot of pain points when they're selling their gift cards online. So now they've actually defaulted pay by bank as a payment method when a customer is purchasing a gift card, essentially because this brought a lot more benefits compared to traditional card acquiring. And those benefits are instant settlement versus 3 to 7 days with traditional card acquiring, considerably lower costs, and also zero chargeback risk.
Okay, another example that we're seeing a lot of traction with, particularly in the UK, is car or vehicle purchases or deposits for vehicles. So in this case, Volvo has been using open banking payments to take those initial payments from consumers in the physical world, using a QR code usually to initiate the payment. You're having a pretty straightforward experience transformed in a very high impact way. So instant movement of funds, which is very valuable to the merchant. We also have massive saving versus people paying on debit card, and you've got kind of certainty that the destination and reference information is all correct. So basically what changes for the consumer here is that they get to drive off the forecourt with the car instantly, rather than usually having to maybe wait for clearance of funds, etc. So small change, big impact.
As you can see with all these examples, the customer experience is quite key, and having the customer in the heart of your propositions and really understanding their journey is what essentially will benefit you and the customer. Start with the customer and understand what their purchase journey is. Where can you embed that payment or that buy button? Frictionless customer experiences create customer loyalty and increase sales. So embedding open banking can help with this. In our recent merchant perception survey report, 45% of merchants surveyed actually stated that improved customer experience is one of the key benefits of open banking. A second benefit is automation of existing manual bank transfers, and closely third is 34% is instant access to cash flow, where funds can be settled instantly or batched to the merchant at a time that suits them. With open banking, there's so many different ways you can actually embed payments. It's not just e-commerce or online payments. And we're going to take you through some today. So this one was actually a personal experience of mine. I recently had my boiler repaired, and the tradesperson actually asked me to send him a manual bank transfer. I guess a lot of tradespeople don't carry around POS devices, so the friction it caused me to log into my bank account, add him as a payee, then send the manual bank transfer was really high. In this situation, what he could have done, potentially partnering with a PSP, is to send me a pay-by-link open banking payment via SMS or email, where I can instantly pay him right then and there, also in a secure way. The second great example and use case for open banking payments are in-app payments. So if you think about open banking, it was actually created with e-commerce and mobile commerce in mind compared to traditional card payments. Open banking actually has automatic app-to-app technology, where if I'm on a money remittance app, a foreign exchange app, or even just a normal e-commerce app, and I click bank pay or open banking payments, it automatically takes me to my bank to securely authenticate me and then automatically takes me back. This is a far better customer experience compared to traditional cards, where the 3DS V2 process is so clunky with one-time passwords, and also considerably cheaper than accepting Apple Pay in-app payments.
One of the other things that we're seeing more and more, and I think is a trend across the open banking market, is the motivation is often around the consumer experience. And in e-commerce now, we're seeing more and more merchants adopt open banking because of the instant refund capability. So rather than taking payment by card and then trying to issue a consumer refund later on those same rails, which can take several days to reach the consumer, if you take an open banking payment in the right way, you can then initiate refunds back to that same bank account instantly. So within 2 or 3 seconds, the consumer receives the funds. And that's very attractive to fashion retailers, etc. I think another area that the market's seeing a lot of traction around now is recurring payments. So in open banking, the standard itself doesn't really have a recurring facility. There's some work being done on something called VRP in the UK, but it's not a reality yet. So what we're actually seeing the market do is take a hybrid approach. and use open banking in conjunction with direct debits, so that you can actually use open banking to capture its strengths, which are security and convenience. So the consumer, kind of creating the mandate digitally without data entry, and then switching on to the direct debit rails, so you can collect money from 500 million plus people across Europe without them having to type in a 30-digit long IBAN. So this is another really interesting area. And look, I suppose just to kind of bring it to life, because people haven't necessarily seen this yet, the consumer chooses their bank, they get biometrically authenticated using Face ID, they click confirm by selecting which of their accounts they want to use, and then they're done. So it's a pretty seamless experience compared to the manual processes of the past. So look, I think that was kind of a whistle-stop tour of the trends, the examples that we're seeing getting traction, and others are getting traction with as well. The QR code on screen here is a link to our merchant perception report, which is a survey of merchants across Europe and what they care about and what they've been motivated into action by. So have a look at that. We'll be here today as well. I'm happy to chat offline. That's it.
Thank you, Brian and Ruwani.
Thank you.